Welcome to The Explainer. Today, we are jumping right into a massive transformation happening in an industry that, let's face it, touches almost every part of our lives: insurance. We're talking about how AI is fundamentally rewiring one of the world's oldest businesses, and in the process, it's creating some very clear winners and losers in a race that's going to define the next decade.
So let's start with this number: $246 billion. By 2035, that's the projected size of the AI in insurance market. I mean, to put that in perspective, we're talking about nearly $250 billion. A number that big isn't just a trend, It's a full-blown revolution. And it really just begs one simple question: what on earth is driving all of this?
All right, so here's how we're going to break it all down. First, we'll look at the why, that massive number and what's behind it. Then we'll get into the how, the actual business functions being rewired and the crazy new AI tools making it all happen. We'll also cover the new risks that pop up, and then we'll wrap up by looking at the big vision for what insurance is actually becoming. So let's really dig into the scale of this investment, because it is nothing short of explosive. We are not talking about some slow, gradual increase here. We're talking about an entire market reinventing itself at, frankly, an incredible speed. Now, what's so fascinating here isn't just the giant number itself, it's the consensus. You have all these different independent research firms, and they're all pointing to the exact same thing: a massive 32 to 37% compound annual growth rate. That's not just a forecast, that's the market basically screaming that this change is real, and it is happening right now. And you have to understand, this spending isn't just, a bunch of companies throwing money at a cool new thing. It's being driven by what our source material calls a dual pincer movement. Insurers aren't just choosing to do this, they're being forced to act by these powerful pressures from both inside and outside their own walls. So on one side, you have this push. Insurers are being forced to fix their old, clunky, super expensive legacy systems. It's really a defensive move just to stay efficient. But then on the other side, you have this pull. They're being dragged into the future by fierce competition from new AI-first companies and, well, by us, by customers who now demand everything to be hyper-personalized and instant. It's a battle on two fronts. And this number, this really shows you what the stakes are. This isn't just about keeping up. It is all about winning. The research is clear. The AI leaders, the companies that are actually getting this right, are generating 6.1 times the total shareholder return of the ones lagging behind. I mean, that is a performance gap that you just cannot afford to ignore. Okay, so if the stakes are that high, where are all these billions actually going? Because this isn't just about adding some new software. This is about AI getting in there and fundamentally rewiring the very core of the insurance business. It's really touching every single piece of the puzzle. From the very start, like assessing risk and underwriting, to that critical moment of handling a claim, to fighting fraud, and even just how they talk to you, AI is transforming every one of these functions, making them faster, smarter, and way more data-driven. And the place you see the most dramatic change is in claims. It's traditionally been this slow, painful, paper-heavy process. It's where we as customers feel the most frustration. Well, AI is just crushing those processing times, turning what used to be a weeks-long nightmare into something that can be sorted out in a matter of hours. And here's the kicker. That speed isn't just for our convenience. It creates over $100 billion in actual value by cutting down on admin costs and reducing what they call payment leakage. That is a massive, massive incentive to automate. So, what's actually powering this whole transformation? Well, it's a new multi-layered tech stack. And the real magic isn't just one type of AI. It's how all these different types are stacking together to solve problems, both old and new. It all starts with predictive analytics. You can think of this as the bedrock, the foundational AI that's been the engine for risk analysis for years now. It basically uses machine learning to sift through mountains of data to predict trends and, most importantly, to price risk way more accurately. Next up, you've got generative AI. And look, its role here is way more interesting than just chatbots. What's absolutely critical is that it's being used to solve one of the industry's oldest, gnarliest problems: updating ancient, incredibly complex legacy code. This is the key that unlocks the data that all the other AIs need to even work. And finally, we get to the really cutting-edge stuff: agentic AI. The best way to picture this is like an assembly line of AI specialists. So instead of one big AI trying to do everything, you have these multiple specialized AIs that work together on their own to finish a complex job from start to finish. And believe me, this isn't just some sci-fi concept. There's a perfect real-world example in Alliance's Project Nemo. To handle food spoilage claims after a disaster, it uses 7 different AI agents that work one after the other. A planner agent starts it. A weather agent confirms the storm. A fraud agent looks for red flags, and so on, all the way to the payout agent. It just slashes the processing time. But, as you can probably guess, this incredibly powerful technology is not a silver bullet. This massive leap in what's possible also brings a whole new world of risks that insurers have to navigate really, really carefully.
One of the biggest threats, and it's one people often miss, is something called shadow AI. A jaw-dropping 75% of employees are using AI tools at work without any approval or oversight. I mean, think about that. They could be uploading sensitive client data or company secrets into totally unregulated systems, creating these huge privacy and liability landmines.
And on the outside, it is a full-blown AI arms race. Insurers have to spend big on sophisticated AI tools just to defend themselves from criminals who are using the exact same tech to cook up convincing deepfakes and super advanced phishing scams. AI is both the shield and the sword here. And all of this is happening with regulators watching very closely. A whole complex web of new rules is coming, starting with the EU's Big AI Act in early 2025. This isn't the Wild West anymore. Things like governance and transparency are about to become mandatory. So you've got this insane investment, this fierce competition, a whole new landscape of risk. What does the future of insurance actually look like? Where is this all really headed by the time we get to 2030? Well, for the companies that nail this, the data on the return on investment is just undeniable. The numbers show these huge, measurable improvements across every single important metric, from financial returns and how fast they operate, all the way to keeping their customers happy. The value is crystal clear. But really, at the end of the day, the most profound change is a shift in the entire business model. For centuries, insurance has been about one thing: restitution, paying you back after something bad happens. With AI, the industry is moving toward prevention, using data to help stop that bad thing from ever happening in the first place. This isn't some far-off future we're talking about. The industry is being rewired right now and at an incredible speed. It's a multi-billion-dollar race that's creating very clear winners and losers, which really just leaves us with one final thought. Is your business ready for what's coming next?